Welcome to the weekly market recap with SC Securities. Let's have a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka's private sector borrowing has reached a historic high, signaling renewed confidence in the economy and strong demand for credit across multiple industries. According to recent central bank data, licensed commercial banks disbursed 236.3 billion rupees in new loans to private sector in September 2025, marking a 22% increase compared to the same period last year. This figure makes September the strongest month on record for private sector lending, surpassing the previous peak set in August. In total, private sector credit for the first 9 months of the year climbed to an unprecedented 1.36 trillion rupees. Analysts say the surge in credit was broad-based, spanning industry, services, agriculture and personal loans, supported by historically low interest rates and expanding economy. Meanwhile, the central bank announced new loan-to-value limits effective from November 8, cutting the ratio to 50% for private vehicles and 70% for commercial vehicles from previous 60 and 80%. The move is aimed at curbing excessive vehicle-related borrowing, though experts believe credit growth will continue in other segments such as personal and small businesses loans. The government, which targets over 7% economic growth in the medium term, expects the robust pace of credit expansion to sustain momentum. While a modest rise in interest rates is expected by mid to late next year, analysts suggest it is unlikely to slow overall lending activity. Recently, the government unveiled a set of concessionary loan schemes for small businesses, further supporting the banking sector's loan growth. Meanwhile, commercial banks have reported strong financial results for the September quarter, reflecting the positive impact of expanding credit portfolios. Sri Lanka's central government debt has seen only a modest increase this year as the country's debt repayments have outpaced new borrowings. The Finance Ministry revealed the details in its latest fiscal report released alongside the Budget 2026. According to the Economic and Fiscal Position Report, Sri Lanka's outstanding central government debt rose by $1 billion during the first 9 months of 2025, reaching $102.24 billion. That represents a 4.1% year-on-year increase. The report noted the domestic debt rose by $430 million to $65 billion, marking an 8.4% annual increase, while foreign debt declined by 2.6% on a year-on-year basis. Due to limited access to global financial markets, the government relied mainly on domestic borrowings to fund this fiscal deficit. Net domestic financing stood at $1.53 billion, while net foreign funding recorded a negative $171 million, reflecting repayments that exceeded new disbursements. The Finance Ministry highlighted that foreign debt servicing for the year amounted to $2.43 billion, of which $1.95 billion had already been paid by the end September. The remaining $487 million is scheduled for settlement by end of December. This makes an increase of $761 million in foreign debt service repayments compared to the previous year. During the first 8 months, total foreign disbursements amounted to $938.8 million. The largest share, about 73%, came from the International Monetary Fund's Extended Fund Facility, followed by the World Bank, which accounted for around 11% of the total. Looking ahead, the 2026 budget projects total government expenditure, including debt servicing, at 8,980 billion rupees. Of this, 4,495 billion rupees has been allocated for debt servicing, with 2,617 billion rupees earmarked for interest payments and 1,878 billion rupees set aside for loan repayments. Analysts note that while the overall increase in debt remains modest, the heavy repayment burden continues to exert pressure on the country's fiscal position. Sri Lanka's Customs has achieved a historic milestone, surpassing its 2025 annual revenue target ahead of schedule and setting a new record for state revenue generation. According to the department, the total revenue collection has reached 2.117 trillion rupees as of 11th November, exceeding the target of 2.115 trillion rupees. This marks the highest ever revenue in the history of Sri Lanka Customs and establishes it as the top revenue generating government agency today. The resumption of vehicle imports had a major impact on this record-breaking performance, generating 680 billion rupees this year, a sharp increase from 50 billion rupees in 2024. The general cargo revenue also rose by 13% compared to last year. The Director General highlighted that enhanced enforcement and compliance monitoring had helped minimize revenue leakages, strengthening fiscal discipline across operations. The department's achievements underscore a steady upward trend, with the total revenue rising from 975 billion in 2023 to 1.503 trillion rupees in 2024 before crossing the 2 trillion mark in 2025, supporting Sri Lanka's economic recovery and fiscal stability. The Asian Development Bank has reaffirmed its support for Sri Lanka's economic recovery, approving $490 million in funding across several key development programs for 2025. The funding aims to stabilize the economy and accelerate long-term and sustainable growth. According to ADB officials, the total allocation of $490 million covers 5 major initiatives: financial sector stabilization, sustainable tourism, strengthening macro resilience, health sector development, and I-Road 2 infrastructure project. Each of the first 4 programs will receive $100 million, while the I-Road 2 project has been allocated $90 million. Officials also confirmed that additional projects, including $100 million for power sector development and $200 million for the Mahaveli Stage 2 project, are currently under review. In a separate announcement, the ADB approved $100 million financing package to support macroeconomic resilience and sustainable growth in Sri Lanka. The program is designed to strengthen public expenditure management, improve revenue mobilization, and encourage private sector participation in the economy. As one of the region's leading development banks, the Asian Development Bank continues to play a crucial role in supporting Sri Lanka's path towards economic stability, resilience, and sustainable growth. Sri Lanka has achieved a new milestone in foreign income, recording its highest ever monthly workers' remittances in October, reflecting renewed confidence and stronger inflows from Sri Lankans working overseas. According to official data, the country received $712 million in workers' remittances in October 2025, the highest monthly figure on record. This marks a sharp increase compared to $695.7 million in September and $587.7 million during the same month last year. With this latest inflow, total remittances for the first 10 months of the year have reached $6.52 billion, showing a robust 20% growth over the corresponding period in 2024. Economists attribute this stronger performance to several factors, including higher overseas employment in recent years, a weaker rupee, and the improved political and economic stability in the country. In 2024, Sri Lanka earned $6.57 billion from remittances, a 10% increase from 2023. If the current momentum continues, the total remittances for 2025 could surpass $7.8 billion, marking the highest annual figure in history. The inflows are also expected to rise further during the year-end festive season, a period traditionally sees stronger repatriation of earnings by migrant workers. Analysts say remittances continue to play a critical role in supporting Sri Lanka's balance of payments and maintaining external sector stability. Meanwhile, Sri Lanka is also expected to receive $347 million from the International Monetary Fund before the end of this year. Let's take a look at this week's Treasury Bill auction results. With the recent Treasury Bill auction, the 91-day T-bill rate stands at 7.52% with no change in basis points. The 182-day T-bill rate stands at 7.91%, up by 1 basis point, and the 1-year T-bill rate stands at 8.04% with no change in basis points compared to the previous week. Thank you for watching. We'll be back next week.